Okay, let's just state the obvious. The market is in a free fall. And if you're looking at your portfolio right now, it's probably bleeding red. It's an awful feeling. But here's the deal. Panic is not a strategy. So in the next few minutes, we're going to break down exactly why this is happening and give you a clear, actionable plan to navigate through all this chaos.
And look, that's not some kind of exaggeration. We're talking trillions of dollars in wealth. Just gone. Wiped out in only 72 hours. That's not just a dip, that's a full-on financial earthquake. And believe me, we're just starting to feel the aftershocks.
So this brings us to the most important question, right? The one everyone is asking. What happens next? Is this just a temporary tremor, or is this the start of something much, much bigger? What you do next? Well, it completely depends on the answer. And to find it, we've got to look at a really surprising root cause.
This whole thing, it all starts with a word that sounds pretty simple, almost boring, a tariff. But don't be fooled. This one little thing can kick off an absolutely devastating chain reaction. So let's follow the trail.
Okay, so what is a tariff really? Super simple. It's just a tax. Let's say, for example, the US slaps a 25% tariff on stuff coming in from China. Instantly, all those products get 25% more expensive for the companies that are bringing them in. Sounds pretty straightforward, right? Well, the ripple effects, they're anything but. And this right here shows you the domino effect perfectly. First, the tariff gets imposed. Then the company's costs shoot up. And then, and this is the really crucial part, they don't just eat that cost. Oh no, they pass it straight on to you. Suddenly your groceries, your phone, your clothes, everything starts getting more expensive. And this isn't just your garden variety inflation. This is something called imported inflation. And it's a huge problem because it's an outside shock that our usual economic fixes can't really touch.
Okay, now this is where things start to get genuinely scary. Because when you get rising prices from these tariffs, and you mix that with an economy that's already slowing down, well, a ghost from our economic past starts to show up. And it's a word that makes economists and investors break out in a cold sweat: stagflation.
Think of stagflation like this. It's like having a really bad fever. Your body is weak and has no energy, but at the same time, you're burning up. That's stagflation. The economy is weak, growth is slowing down, but prices are just soaring. I mean, it is the absolute worst of both worlds. Your paycheck feels smaller, but all your bills are getting bigger. It's just a toxic economic cocktail.
Just look at this comparison. It is absolutely chilling. On the left, that's today. Those are the warning lights flashing on our dashboard right now. On the right, that's the 1970s. When this wasn't a warning, it was a full-blown economic dumpster fire. I mean, can you even imagine trying to get a mortgage with a 20% interest rate? That's how bad it can get. And we can't forget the real human cost of this stuff. This wasn't just some abstract number on a chart back then. This was a crisis that dragged on for a decade. It wiped out entire family savings, it bankrupted businesses, people lost their homes. So when we see these same warning signs flashing today, yeah, we have to take them seriously. Okay, so that's the bad news, and it's pretty bleak. But listen, fear is a liability right now. A plan is an asset. So let's pivot. Let's stop talking about the problem and start talking about what you can actually do. We're going to move from diagnosis to action right now. Here are the precise steps you can take to not just get through this, but to actually come out stronger on the other side.
So here it is, your simple 3-step action plan. And look, this isn't about some complicated stock-picking strategy or trying to perfectly time the market. No way. This is about fundamental, battle-tested strategies that work when you're in the middle of a financial storm.
All right, step 1, this one is probably the hardest, but it is without a doubt the most important. Do not panic. Sell. I get it. Every single instinct in your body is going to be screaming at you to sell, sell, sell as you watch those numbers go down. But you have to understand, that's your lizard brain talking. That's your fear. And in investing, that voice is almost always wrong.
I want you to really let this sink in for a second. Every single crash in the history of the market, we're talking the Great Depression, Black Monday, the dot-com bubble, the 2008 meltdown, all of them. Every single one has been followed by a recovery, and eventually by new all-time highs. The only guaranteed way to lose your money for good is to lock in your losses by selling at the bottom.
Okay, step 2. Now it's time to build your fortress. When things get uncertain, when a recession might be coming, cash is your shield. It's what protects you from being forced to sell your investments at the absolute worst time just because your car broke down or you have an unexpected bill.
So what does that actually mean in practice? It means you need to have 3 to 6 months of your core living expenses saved up. And this is so important. This money does not get invested. It needs to be in cash. Put it in a high-yield savings account where it's liquid, meaning you can get to it immediately if you need it. This is your financial safety net. Don't skip this.
All right, once that fortress is built and your safety net is in place, it's time to switch gears. It's time to go on the offensive. This is where you make that critical mental shift from fear to opportunity. I know it sounds completely backward, but market crashes. This is when the next generation of wealth is actually built.
And hey, don't just take my word for it. Look at the master, Warren Buffett. Right now, he's sitting on a massive war chest of over $300 billion with a B. Is he scared? Nope. He is excited. He has been patiently waiting for this exact moment to go on a shopping spree.
So here's the bottom line. A market crash is basically a giant everything-must-go sale for the best companies in the world. While everyone else is panic selling, the smart, disciplined investors are calmly buying up quality assets at a huge discount. This is how you build real, generational wealth.
So you see, we've talked about the tactics, the what to do. But the real key to getting through a crisis like this, it isn't really financial at all. It's psychological. When everything is in turmoil, your mindset, that is your single greatest asset, period.
This right here. This is probably the single most important lesson in all of investing. You have to remember, the market is just a mechanism for transferring wealth from the impatient to the patient. That's it. Your ability to control your own emotions, to master your fear when everyone else is losing their minds, that's what's going to determine whether you win or lose in the long run.
So at the end of the day, it really just leaves you with a simple choice. Are you going to be part of the panic crowd, selling low and guaranteeing a loss? Or are you going to be the calm, prepared investor who sees the opportunity hidden inside all this chaos? The choice, as always, is yours.